So the Fed decided to continue with the hike of the interest rates. But things are different this time as it were in the previous quarter. And now it seems that there is a plan behind the hike of the interest rates because we have falling banks and the market also reacts in a different way. So let's check what could be that behind the curtain plan, how this will all go down and how the market reacts. What is the outlook? What are the price targets? Let's start. So as you can see, the Fed raised the interest rates. We are at 5% right now. It is the continuation of the most aggressive quantitative tightening. And yes, you can see that banks are falling. The reason banks are falling is because their unrealized loss is bigger and bigger. And whenever they want to take it out, whenever they want to cash out because there is a, I don't know, bank run, then yeah, they need to take a loss. And the depositors are without money because banks invest with money which they don't have. So yeah, that's the problem. But let's not go into that because there are several videos about this on the internet. Let's see what is happening with the interest rates because not everybody was expecting it. The market, the communities were screaming zero interest rate hikes. They were screaming pivot. And I have to say, I wasn't surprised when they actually increased it by 0.25%. As you can see on this tweet, which I made yesterday, that yeah, greed is high and we are in a rising wedge. I even replied to Ellie that I expect 0.25 interest rate for the simple fact that on the first obstacle the Fed meets, and that was the banks, right? The first negative feedback or the first I don't know, negative market reaction, they cannot budge. Okay, they cannot just go back and say that okay, we did it a bit too aggressively, it wasn't a good decision. They need to hold the image of them knowing what to do, and they need to act like they do this like intentionally, right? Which I am sure they do, and I said many times that they are in a tough position. Now let's see what could be the plan, and after that we will check the charts. I think DX man made here a great thread about it, and if you don't follow him, go and follow because he has some great threads and good analysis on YouTube as well. So he said that there is quantitative tightening in the front and quantitative easing in the background. And yeah, that is true because they are also printing money. So this quantitative tightening, this interest rate hikes, in the end is just controlling the money spending, the money printing, because I think they are past the situation where they can reduce the inflation, and they are at a point where they need to save banks, but they need to tighten because otherwise the inflation will skyrocket again. And as he says, there are three main questions. First, where will funds for these banks, loans and deposit insurance come from if collateral is underwater? Obviously. How will the Fed bring down inflation? They are in a tough position because they need to print money and they need to tighten, which like equals each other out. And how will the Fed stimulate the economy during a deflationary crisis? That is also a good question, and I hope that we don't enter in a deflationary crisis. However, that's also on the table. Now, the Fed strategy is QT in foreground, QE in the background, exactly what I said. And he says that begin quantitative easing to stimulate the economy. I think 1, 2, 3 rate hikes will still happen, and then they will just make up some kind of a story, some kind of numbers, inflation, CPI, whatever they need, so they can say that okay, it is time to pivot, and from next year probably they will start to reduce the rate hikes. I am 100% sure that this also goes hand in hand with how the banks can hold up. Okay, if the big banks start to suffer like JP Morgan, then they will pivot even faster. So right now what we need to monitor, what is the banking situation, right? Because that is the last thing they want. They want a stable banking system, otherwise we will go into a deep shit. You understand? Okay, let's go forward and see what is happening on the market, what happened on the charts, because that is also very interesting. And actually, coming back to this tweet, as I said, brace for impact. And Be Successful also commented that 1 hour is irrelevant on long-term body. Well, yes, I agree, as you can see, but still, we don't want to panic. Okay, that is the most important thing. I think that is the essence of of everything, not to panic. We don't want to panic. Okay, so what is happening with Bitcoin? What happened? Well, in the first couple of minutes, it went up to 28,000, almost 29,000. That was nice. That was nice to see. And I was thinking that if this holds, and as you can see, there was a bounce from support as well, then, oh my God, we are going to rally so high that, yeah, it's going to be great. But interest rate hikes are interest rate hikes. And after that, we just dropped down to 25,000. Now, you might see this as a bad thing, but the fact that, let's go to the 4 hours so nobody's eyes would hurt from the 1 hour. The fact that we came down only to the 26,600, we didn't even touch this 26,000, which is like a support for me here. As you can see, it was a rejection again, and then breakthrough and support. And yeah, not talking about the 25,000, obviously, which is a battle which we had for several weeks. Now, right now, from my point of view, things are looking out great. This might be an upward correction. I'm not saying that we might not go a bit lower like this, okay? Because this might be a new downwards trend, right? Because we had this triangle or rising wedge from which we broke out into the downside. Now we corrected, and it might happen that we go lower. However, the fact that we didn't crash back to the 20k, we didn't break like all the supports downwards, and from there we corrected. The fact that the 21 4-hour moving average held the price, if anybody counts that, I don't really, it's just for, indication. I think it's a great thing. And I think that in the end, we will have some good price action. For the next 4 months, we don't really have any quantitative tightening coming up. So from here, Bitcoin could go up, obviously, based on what the investors want to see, whether the miners will sell or not. Now, there is one more thing which I want to share with you, which is annoying, but it's happening, and I hope that this will be on our benefit, and that is that Coinbase will be sued by the SEC. So Brian Armstrong, as you can see here, he's the CEO and co-founder of Coinbase. Today, Coinbase received a vast notice from the SEC focused on staking and assets listing. Now they go after Coinbase as well. Now the difference between, because as you remember, they went after Kraken as well, and Kraken had to seize the staking provider services. Coinbase is a public company, okay? That means that whether they staked or not, whether they offer securities or not, if they are securities, they were checked and passed 2 years ago. And that is the important part, because they are a public company. They are another whole story than XRP or Kraken. Therefore, this is looking out great. I don't know with what SEC will come up, but Coinbase is mostly regulated. Coinbase is public, and I think they have a very good set of weapons in order to fight this SEC stuff. We can see that, yes, SEC is going after crypto companies, after crypto banks, after everything which has to do anything with crypto, because I do think that they are preparing for the CBDC, to which some of the states are already opposing to, like Florida and I think Texas maybe. The governors released some kind of a statements. So I'm looking forward to see what is going to happen here. I'm sure that this will be a bit different than XRP, and I hope that they will not try to use this to make a statement with them. But yeah, this is what's happening on the market. Crypto is under attack, but as you can see on the charts, holding up like a champ. So go Bitcoin. Take care.